Are you ready? Are you ready? I'm always ready. Hit it. I saw you were with them last night. I saw you were with them last night. Don't burn the bridge, burn the paper. Yeah, don't burn the bridge, burn the paper by Billy D. We are going to be going on tour, Sean. There's some surprises coming up in the next couple of weeks. I might actually have an agent. Are you there?
Yeah, I was just thinking if you started writing songs about Medicare enrollment and things like that,
oh my God,
you could get like sponsored. The AARP, I read this the other day, AARP is sponsoring the Rolling Stones concert. And it just floored me. But if you think about it, most of those people, most of the members of that band are well into retirement.
Not only well into
Keith
retirement.
Richards might only be might still be alive too.
Yeah, well, not only that, but the people coming to see the Rolling Stones are showing up in walkers and wheelchairs. So no offense.
You know
folks.
what? That's not a nice thing to say, but what's funny is my wife and I go to a lot of concerts. Mm-hmm. And we sit and we look around, and it's like, wow, there's a lot of gray-haired people sitting around. And she looks at me and she goes, and you have a full head of hair? Shut up.
Yeah, well, she's not, I know we love James Taylor, and it's the same thing. You look around, and it's like, these guys were hippies once upon a time in the 70s and 80s, it is what it is. We're not going to Taylor Swift concerts. Let's put it that way. So, welcome back, everybody. This is your Insurance Corner at 101.5 FM, WLCB, Slade's Corner, Wisconsin. Sean, while we're at break, one of my regular listeners just tried to call, and I was in the middle of setting up the bumper music for the break, so I couldn't answer her. So if you want to go on to the radio, you can call me back on the cell phone, and you can raise your question. But if you butt dialed me, I will call you later. And you know who you are. I know you are listening. So I explained one example of a problem that could happen. Here's another one. It's very common. And we touched on this last week. I'll just touch on it again before I get into the newer part of the topic that I want to cover today with regard to Medicare. The size of the company that you work for matters, folks. I hear this a lot. I'm working, so I don't need to sign up for Medicare. I hear that. I also hear this. Even though I'm still working, my buddy told me I'm 65 and I need to sign up for Medicare, otherwise there's going to be a penalty. And on both cases, folks, I just want to scream. Because under 20 employees, ladies and gentlemen, you must sign up for Part A and Part B. If you have an Obamacare medical plan, an individual medical plan, you must sign up for Part A and Part B. Obamacare is going to end when you turn 65, the first of the month you turn 65, and you have to get Part A and B. Now, whether you get a Medicare Advantage plan or a Medicare supplement, that's your decision. But if you don't get Medicare Part A and B, and usually the time to sign up for that stuff is 2 to 3 months before the month in which you turn 65, and you got 3 months after that month, so you got basically 7 months to sign up. If you don't do it, you will be late. You will be late. And the people that work for smaller companies, well, Bill, I was working. I didn't think I needed to sign up for Medicare. That's not the rule. The rule is Part A and B have to be there because your insurance carrier will assume that you have Medicare Part A and B. And as I pointed out that example before, you could be stuck with a huge bill. Now, I'm going to put a little asterisk here, Sean, because there's a curious little thing in the system that may presuppose what I just said. And I'm not advocating this by any stretch. but I've heard this more than once. When the Affordable Care Act was passed, they got rid of age over 65 rate classes. There used to be rates for people under 65, and then if you were Medicare eligible, there'd be a subsidized rate, if you will, by the carrier, and you can still stay on a plan for a cheaper rate. No problem. Fast forward to Obamacare, those subsidized rates went away. So at 65, if you're an age-based client, you're paying well over $1,000 a month at 64, 65, et cetera, per person, mind you, not per family, per person. I have heard anecdotally that some carriers will just turn the cheek and assume that you're primary on their group plan. Other carriers are a case-by-case basis. Some will, administer it as if you had Medicare Part A and B. Others will go, well, we're going to process Sean's claim as if he's primary, no big deal. It's just an office visit and prescription. We'll just process the claim, no problem. I'm not sure I want to be on the other end of that if you have a $100,000 medical bill, folks. So my rule is always the same. When you are working for a small company, less than 20 full and part-time employees on payroll, and by the way, the insurance company knows that you have less than 20 employees because they've been told by your employer and probably by the broker who put the plan together. If you're under 20, Medicare Part A and B have to go first. So the mistake for a lot of people is, I'm working, I don't need to sign up for Medicare. Wrong answer. Now, you can keep your group plan if you want to use it as a supplement. That's perfectly fine. That's no problem, especially if you got spouse or kids that need to be covered. Unfortunately, the employer is kind of stuck between a rock and a hard place. It is further a rock and a hard place if the only plan you have is a health savings account compatible health plan. When you turn 65 and you go on to Medicare and or you take Social Security, you lose the option of funding your HSA account immediately. So you have an HSA plan with a $5,000 deductible. You've been on automatic pilot. You've been funding that thing to the max. You turn 65 and somebody like me shows up and says, sorry, Sean, you can't put any more money into it. You're on Medicare. That may not be fair, but that's the rule. That's not my rule. That's the tax rule. Consult your tax advisor if you want more information about that, but that is definitely baked in the code. I hope at some point in the next year or two that gets fixed, because there are a ton of businesses, whether we like it or not, that are buying HSA-compatible plans. They don't have any copays until they reach their deductible of $3,000, $4,000, $5,000, $6,000. And so you're on the hook for a big chunk of that. If you can't fund it because the law says you can't, but you still have to work either because you want to or because you got kids that are, or a spouse that needs to be covered still, you're caught between a rock and a hard place. Let me point out something else here too. This question came up today, Sean. I had a question posed by a broker friend of mine that I work with, and he said, can I put together a program where an employer can say to, let's say, Sean, you're working for me, and let's just say for discussion purposes, I have 100 employees, just for the point of discussion, more than 20, all right? I'm like, Sean, you need to be on Medicare. You shouldn't be on my health plan. And you're like, well, Bill, it only costs me $100 a month to be on your plan. Medicare is going to cost me 3 times that. You're not wrong. Well, Sean, I'll make it worth your while. I'll pay the premiums for you. Can't do that. You cannot incentivize an employee to move off the medical plan so that the rates for your company are better, any more than you can incentivize an employee who may have a pre-existing condition. The employer cannot force you off the plan. Just let me read a couple of these little tidbits here. Representatives from the U.S. Department of Labor have also stated informally that encouraging a Medicare-eligible participant to disenroll in employer-sponsored group health plan may violate Section 510 of ERISA, which is the Employee Retirement Income Security Act of 1974, which in and of itself is like King Kong, the gorilla of healthcare. This provision makes it unlawful to discharge or discriminate against a participant for exercising rights under an employee benefits plan. And I'm just going to add, because there's a separate paragraph about this, even if it's in that person's favor to do so, you're not allowed to push them out. Even if it's in their favor to do so, whether it's a cost thing or an out-of-pocket thing, it has to be on their call, it cannot be incentivized. Now, I can sit with you, Sean, and I can give you the pros and cons of staying and going, but I can't tell you, if you said, well, Bill, what would you do if I can't answer that question. I'm not allowed to answer that question or to incentivize you to do that. It also states that there are discrimination concerns under the ADA that provides protections to employees age 40 and older who may be disabled. Employers are prohibited from discriminating against an individual with respect to employee benefits based on their age or disability status. Since individuals can qualify for Medicare based on their age 65 or receiving disability determination, discrimination concerns under the ADA may become present when employers encourage Medicare-eligible participants to waive the coverage under their employer group health plan. That's a big no-no. Cannot do it. Now, so just be aware, folks, if anybody ever approached you for even a subtle suggestion of coming, getting onto Medicare and getting off the health plan, you can have the question, but the employer or their advisors cannot incentivize you. They cannot pay your premium. They cannot pay your deductibles, your out-of-pocket costs. They can't set up an HSA plan for you. They can't set up an HRA plan for you or a health reimbursement arrangement. Can't do any of that. There is one exception where you can set up a health reimbursement arrangement, and that is for retirees. So if you have a retiree provision, the company can set up a retiree health reimbursement arrangement to pay the Medicare premiums. That's the only incentive, but at that point you're retired, right? So you don't have to worry about that. You just can't be forced off your medical plan no matter what. And there are plans out there, Sean, that are self-funded for small companies as well as large companies. And for smaller companies, if they're in that space and there's a medical condition that's causing a lot of havoc with premiums and so forth, I can see the incentive for the employer to get Johnny off the plan. Can't do that. That's against the law. You're going to go down fast. So under 20 employees, you have to sign up for Medicare. Over 20 employees, you don't have to do anything. Let me say that again. If you have more than 20 employees in your employer plan, you don't have to sign up for Part A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P. None of that. Don't have to do anything. Don't listen to the employer. Don't listen to the broker. Certainly don't listen to your buddy. No offense to your buddy. His heart's in his right place, but he doesn't know what he's talking about. You don't have to sign up. Now, if you choose to sign up, you can do that. No problem. It might be in your best interest. If you are 65 years old and you don't have the spouse or kids to worry about, and your employer has a plan with a $9,000 out of pocket, and your premiums for single coverage might be a couple $100 a month, that may be worth a consideration. Because in the best of all worlds, assuming that there's no IRMA tax, we've talked about IRMA before, that's that tax that causes a great deal of pain for clients that did very well 2 years prior to their going on this, Medicare. It may be in your best interest to consider going on to Medicare Part A, B, and C, and D, and in the best plans, you're looking at $340, $350 a month, and you've got a prescription program. You've got a deductible of $240, and as long as your doctor takes Medicare, you're golden. You're golden. So it may be worth a consideration, but if you choose not to do that for whatever your reasons, that's perfectly okay. You will not, underscore the word not, be subject to a penalty, and you will not be subject to a waiting period. When you do say to your employer, okay, Sean, I'm done. I'm going to retire at the end of the year. I'm going to retire on March 1st. Then you consult with your advisors or the broker that's working with the employer and get yourself signed up for Part A and B and supplement, whatever. Dental, let me just add this other little, oh, by the way, clause. Dental and vision are not the same as medical. Medicare does not cover dental or vision. So you can easily stay on the employer's medical or dental plan and vision plan, no problem. No problem. If you're allowed to stay on, you can stay. If you decide to go on Medicare for your medical and you're still going to work so you can get the dental and vision, you can do that. If you do retire, dental and vision, generally speaking, for companies with more than 20 employees, get COBRA for 18 months. In some cases, the spouse might get 36 months. But generally, it's 18 months if you're the trigger for the reason for the COBRA. So you can COBRA your dental and vision. Medicare, again, does not cover dental and vision. Medicare Advantage plans, however, do. And in some cases, you may have to pay an extra premium, other cases not. So it's just a matter of evaluating what you're buying. As I like to say, it's not about the premium, it's what's in the contract. Review your contract and make sure you know what you're looking at. Because the claim is going to be paid, it's going to be paid based on what the contract says, not based on what the broker said, the employer said, or your neighbor across the street said. And again, as I said before, you cannot carve out Medicare eligible people for companies over 20. You can't. It's against the law. Like I said, even if it makes financial sense for them, you can have a casual conversation, but you can't create incentives for them. Can't even pay their premiums unless you have a retiree class, but that's different. Under 50 employees, Sean, and the reason why I'm bringing up under 50 is for companies that have less than 50 full and part-time employees on payroll, they're not subject to an Obamacare penalty. In other words, they don't have to offer health insurance if they don't want to. That's perfectly fine. As maddening as it might be, especially if you've got 40 employees, that's a small company, but that company puts themselves in a bad position for keeping and retaining and acquiring good talent, because if you're going to pay them and you're not offering benefits, that may be a reason for somebody not to join the company. But that being said, companies with less than 50 full and part-time employees do not have to offer health insurance. However, they can offer, if there is no health insurance, even if there are other benefits available, if there's no health insurance, the employer can set up what's called an ICRA, an individual health insurance reimbursement arrangement. And basically what an ICRA does is it reimburses the premiums for the individual person. So if you're 60 years old and you have a company with 30 people and you do not have a health plan and you want to set up an HRA for individual premiums, you can do that. There are companies that will help you do that, or at least at a minimum, you need a document to be able to do that so that when the premium check is presented to the employee, they're not taxed on it. Any questions so far, my friend?
No, I'm kind of glad that most of this isn't applying to me yet, because there's a lot of information, and I know you're keeping it simple for us, but boy, there's a lot of details here to go through.
Yeah,
and when you're eligible and when you're not eligible.
And the problem comes in, Sean. Like I said, I'm in the middle of reading Medicare and You, and it's not an easy read. And I read technical stuff all the time. But this is the first time, second time really, that I'm going through it, but I'm going through it much more with a fine-tooth comb and a highlighter and taking notes and this and that. So there's going to be more to come as I get into the middle of this. But as I said at the beginning of the show, one of the annoyances I had was right at the beginning, Sean, it just compared original Medicare with Medicare Advantage, completely disassociating the fact that if you bought a Medicare supplement, except for a $240 deductible in most cases, you're not going to have any out-of-pocket cost, as opposed to, but you will have a premium. Truth be told, you will have a premium, and you have way more freedom of movement. But the document doesn't give you all of that. It spends more time talking about Medicare Advantage and the fact that it includes drugs and dental and vision and hearing aids and a gym membership and blah, 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 and all of that. Now, the reason I'm bringing this up is this is not being talked about right now, but I'm seeing a whole bunch of stuff coming from my sources online and on the internet with regard to Medicare Advantage plans. So, Sean, you probably know that there's a lot of plans out there with no premium, right?
Correct. And
Yep.
I get everything I'm entitled to.
Yep, no premium. And so if the carrier doesn't charge you a premium, does anybody bother to take a step back and say, how does the insurance company make money?
I don't care. It's free, and free is for me.
Yeah, that's exactly right. And I don't blame people for going down that lane. I don't. I get it. The carriers that are in the Medicare Advantage plan get billions of dollars a year to subsidize the Medicare subsidize the Medicare system and basically take over the health care that Medicare would otherwise be paying for. However, the federal government has just recently learned that these billions of dollars are costing more money because there's 12,000 people a day that are turning 65. And it's putting way more pressure on Medicare and Social Security. So one of the things that our radar is up now on is the fact that Medicare Advantage plans may see some cuts in in either the reimbursements or the plans that are being offered because the feds are talking about cutting back their share of the money that they're giving to the insurance carriers participating in Medicare Advantage. So we don't know what that looks like yet. We don't know if they're going to start charging premiums, reduce doctor networks, get rid of the gym membership, add more premium for dental or vision, or take things away. Unless you want them, then and maybe you have to pay retail cost rather than wholesale. But we're now in April, and probably by August, for sure by September, we're going to have an idea of what's happening with regard to Medicare Advantage. So stay tuned. Well, let me see if there's something else that I want to cover here before we end the show. Got to get the screen turned on so I can see the clock, because the clock on the wall is not right. It may be off by a couple seconds. So I got 2.5 minutes, Sean.
You do.
Let's see. Oh, yes. Okay, so dates to consider when you're talking about Medicare, particularly Medicare Advantage plans and prescriptions. Dates to consider. October 15th through December 7th is open enrollment for all standalone prescription programs and all Medicare Advantage plans. When you sign up for one, and it's January 1st, unless you move into a nursing home or move out of area, you're stuck with that plan for the next year. So October 15th through December 7th is the open enrollment period. January 1st through March 31st, if you're on a Medicare Advantage plan, notwithstanding what I just said, if you're on a Medicare Advantage plan, you have a one-time option to switch out of Medicare Advantage and get into a supplement or vice versa. A one-time option. One time. No questions asked. I can tell you with Medicare supplements or Medigap plans, after your initial enrollment, 6 months later, if you want to switch out of your Medicare supplement policy, you have to go through medical underwriting. And it is at that point that the insurance company can deny you coverage. So you have to make sure that you pay attention to the companies you're looking at. All the supplements that you're going to look at, Plan N, and Plan G, are the same. Plan G is Plan G is Plan G, Plan N, Plan N, Plan N. They may add some extras in there, but the basic essence of the plan are the same. They're identical, whether it's Blues, ARP, Mutual of Omaha, Shifting Sands Insurance Company, etc. So there's a lot to unpack there, Sean, for the last hour. I appreciate you hanging with me. Any questions?
No, sir. No, sir. I do take notes, though, because I know in just a scant 11 years, I'm going to have to know this stuff.
Well, there will be a test next week. So
oh boy.
There you go. Multiple choice, though, and fill in the blank. And fill in the blank. So with that said, Sean, that's it. This is 101.5 FM, WLCB, Slade's Corner, Wisconsin. That's Sean Hauser. My name is Bill Miksch. This is 101.5 FM, WLCB. Have a great night, everybody. Take care.